the thing is you have created a exaggeration of how much you can actually give to that lender. So I would say that before you actually go source out from a private lender, know your numbers and know how much you are willing to actually give away from your profit.
Property investing, it's not just necessarily buying at any price below market value. It's not just getting the finances. We need to sit down, look at the spreadsheet, look at the return on investment, look at it in a sense whereby what is the current interest rate and how many options do I have out there? Because
2023, man, 2023, the land of, what do they say? The land of opportunity. This is the year of opportunity. Man, I'm really excited about this year. I can't wait, man. Let's dive deep into content. Now, is there anything that you want to say to our viewers for the first video for 2023?
Really excited, man. Really excited. And we're taking off from where we left off from last year, December, when we did our live. Basically, what happened is that we were discussing the different ways, approaches, how to go about property investing. And then something really stood out in a sense whereby financing. A lot of people get in terms of, I need finances to invest in property. However, now the question is that we do not question the type of financing that are out there. And that's what we will be doing today, looking at financing and property investing.
Other people's money. Whenever I'm thinking financing, I'm thinking about other people's money. I mean, if you've been through property investing, you know that the lingo is other people's money. So today we're going to be speaking about other people's money, the pros and cons of getting that other people's money, and what would we suggest is the best way to actually finance your property right now.
When it comes to other people's money, what comes into place, especially based on where you started your property journey and what you know now?
The psychological game in investing with other people's money, it's the hardest. That's why I always say that before you start thinking about, let me get other people's money, firstly, use your money. Use your money. Let's see if the strategy that you're actually using is right. And then once you have actually proven that that strategy is the right strategy to invest in, then only go and source other people's money.
For sure, man. I mean, for me, when I'm thinking about other people's money, it comes back that question that I'm always asking, at what cost are you borrowing? So to me, it doesn't make sense for me to get access to finances. Let's say I've got access to $1 million. However, now looking at this deal, it's not making sense. I can't grow. I'm not getting cash flow. Yes, I did get the finances. However, when it's coming to growing, I'm really finding it difficult. So again, today's topic, what we're looking at when it comes to financing properties, yes, there are options, and when we do get these options, what does it mean for my growth?
Yeah. So for everybody who is in the live right now, and maybe you're thinking that you might not be able to finish off the live, make sure that you do go over to our YouTube channel. That's where you're going to get the full video of what we're doing right now. So the first one that I wanted to speak about is private lenders.
Sure.
Someone comes to Neo.
No, I just thought about somebody in a black jacket with black glasses.
Yeah, and with the hands in the pocket, and they're asking you, how much do you want, right? Typical mashonisa vibes. So now, when you're looking at your private lenders, right?
Yeah.
One thing that you need to understand about a private lender is that they don't want to be in the deal with you for the long run.
Yeah.
So now, most of the people, they would be like, okay, with property investing, it's a long-term game. And then when I'm borrowing money from somebody, I want to stretch it out like a home loan for 20 years. I mean, it doesn't make sense for me to be in a deal with you for 20 years, right?
Yeah.
So now that will be typically more for your flipping guys. So if you want to move into what's flipping and you want to actually source out financing, you'd rather go to private lenders. The reason why I'm saying private lenders is that with flip, I'm buying the property, I've acquired the asset, I'm fixing it, and then I'm reselling it. So in that way, I can give the investor a timeline of around, let's say, 6 months for me to pay them back. However, when you're looking at renting out a property and now you're getting a private lender to finance that property, now it becomes a problem because now private wants to get their money like now.
Yeah.
So now they don't want to stretch it for the next 20 years.
Yeah.
So that's why I'm saying that with private lenders, if you are stressed about money and you're trying to actually get money, make sure that you're actually using the flip if you're going to go towards your private lender.
But on the contrary, right, we were just doing research. If somebody who's a private lender, and I know that I don't want to be in a deal for long, as you did mention that if you're not being in a deal for long, I can go this route. Will it make sense for me now to take money? Yes, going back to how I started it. Yes, I found somebody who's willing to give me 1 million for this project, and they're saying that they'll charge me at 40% interest. So even if, yes, I will be out, does it still make sense in that way? Because a lot of people will then hold on to the fact that yes, I did get the money, but not necessarily focus on the type of investment in a sense whereby how much am I really getting out after this? Because personally for me,
40%
I wouldn't be in a deal whereby let's do a practical example. Let's just say that 40%, we're looking at 40%, right? Let's just say that from the profit sharing, this person will be getting more than me.
Yeah.
And I don't want to find myself in that situation because yes, they did have the finances. Yes, I did have the vision, but I guess maybe I'm at that stage whereby as much as I am getting finances from someone, what is the business model behind it?
I like what you're actually saying right now. Now, here's where this thing of private lending gets into play, right?
Yeah.
If we are saying that we're going to be investing in a property, the first thing before we actually go out and source financing, I need to understand that how much am I actually expecting from this particular property. Now, if my returns are saying that I'm getting 20%, I mean, it's ridiculous for me to go ask for 40%, right?
Yeah.
To ask lending for 40%. However, if you're looking at a situation whereby you're getting, let's say maybe 60%, maybe one might be able to get 60%, and then you didn't have any financing, right? Number one, your back was against the wall. Number two, you didn't have any way of financing that particular property, and the project has actually stopped. And somebody is saying that they're offering you 40%. I mean, you can have a conversation between the two of you whereby you tell them that no, 40% is too high.
Yeah.
Maybe let's try to decrease it, right? But now, if you're looking at that particular situation, it's more of a conversation between yourself and that property investor or that private lender. But now, the thing is, here's where the danger is about this private lending. If you don't know your numbers or you didn't run your numbers and you find out that the return on investment was 15%, the returns that you got was 15%, however, you're giving this person 40%. I mean, even the next time when you go ask a loan from them, they're going to want that 40%. The thing is, you have created a exaggeration of how much you can actually give to that lender. So I would say that before you actually go source out from a private lender, know your numbers and know how much you are willing to actually give away from your profit. Because now remember, if I'm putting my money into this property, it's either I'm saying that my return on investment is 15%, so I'll match the 15% with what I'm going to give to the lender, or it's going to be below the 15%. I could never go higher than what I'm actually getting on my money.
Yeah. And it's very important that we really focus on this side when it comes to property investing, because a lot of people are more focused on location, they're focused on earning income, whereas we're not necessarily scrutinizing the return on investment as per se, or the lending rate as per se. So again, I'll say that I like what you mentioned there in a sense whereby if I'll be getting, let's just say, yes, that 40% was too much, we can still take it down. If I'll be paying this person 20%, but the return on investment I'm getting is 5%, it doesn't really make sense. We can even stretch this investment further by looking at a spreadsheet. How do we go about it? Let's say that I made, let me just play around with numbers. Let's say that I made 15,000 from this flip. I made 15,000 from this flip, and I want to understand that, was this a good deal or not? Yes, I didn't run at a cash flow negative, but now when I'm sitting down and looking at my spreadsheet, I can see that I made 15,000. The next question then should be that, from this 15,000, how long was I in this deal? And then I find out that I was in this deal for about 6 months. So what I'll then do, I'll say the 15,000 divided by the 6 month, which is 2.5 a month that I'll be earning. Now I can take it further then and ask myself that, looking at how much I would be paying that private lender, does it make sense for me to go through all the stress? Trust me, you can just go over to our Instagram and then you'll see how stressful a flip is. See us painting, see us stressing about all of these things, or even our YouTube, but you really need to dig to find it. So at the end of the day, what we're saying is that property investing, it's not just necessarily buying at any price below market value. It's not just getting the finances. We need to sit down, look at the spreadsheet, look at the return on investment, look at it in a sense whereby what is the current interest rate and how many options do I have out there? Because it's pointless for us to rush into a deal only to find out that we'll be maxed out when it comes to the interest that we charged.
No, give us the second point.
Before we go to the second point, I have a question for everyone, right? How many banks do you think that we have in South Africa? So there's the number of banks that we have in South Africa, and then we have domestic banks. So there's two questions that I asked. How many banks as a whole do you think that we have in South Africa, number one? Then question number two is, how many domestic banks do we have in South Africa? Because
please don't cheat and go on to Google right now and ask Google how many banks are there. Just put in a random number. It's okay if you're wrong, man.
The highest that we got, bro, is 12. 12. So I'm about to hit you with a down low. So looking at banks in total, we've got 62 banks in South Africa. Like, that's crazy.
How many banks is that?
62 banks. That's crazy, bro. Because most of the time what we do is that we only focus on the commercial banks and
the
we
major
only,
banks, yeah.
Yeah. And then looking at it from domestic, we've got 18 domestic banks registered. Now that now brings us to what we're talking about today in a sense of finances. We shouldn't be narrow-minded in a sense whereby when I'm thinking about financing my property.
Now, could you please repeat how many banks do we have, man? Please.
I'll repeat it for you, buddy. We've got 62 banks in South Africa, right, as a whole. And then the ones that are domestic, we've got 18. That's crazy. Like, even with us before we went into these...
I was thinking 4. I was like, it's only 4. Okay, no, not 4. 5.
You thought about green, blue, red, and what else? Black.
Yeah. But now remember, there are 62 banks in South Africa. So now imagine if you are only applying at the 4 major banks or the 5th one, and you are not disregarding the other, 59 or something like that. Now imagine how many loans could you actually get? How many better loans could you get? So now this is where you get somebody saying that, no, I got minus prime, right? And you get somebody that's getting a return, interest rate of 9%.
So ultimately what we're saying, the reason why we did research on that is because when you're looking at the financing structures that we do not focus on how much we're charged on the interest. We only focused on, yes, I pre-qualify, so I'm going with that bank that I've always been loyal to. So now with the information that we just put forward, again, it's very important to spread out when it comes to you applying for investments, because as Lebo did mention, if your bank alone will be giving you X amount, whereas the other banks would have decreased the interest, I'm loyal. To be honest, I'm loyal to the interest rate. I'm not loyal to a bank. I'm loyal to an interest rate. Tell me who's loyal to the bank and they do not. And this happens. Hey, this happens. I mean, we've had encounters. By the way, if you want to book a Zoom with us,
it's especially with these guys, the private bankers, right? I have private banking with this, and I'm loyal to my bank. Come on, man, spare me the details, man.
So here's the thing, right? Here's the thing. You are looking at being loyal to your bank, whereas you're charged, let's say for a home loan, it's about 10.25, right? Well, 10.5. It's 10.5. Whereas only to find out that with the other banks, you would be charged, let's say, 8%. Now, if you are looking at the 2% being not so much, trust me, I need you to do this activity. Go back to your numbers or ask your banker that if you were charged 10% versus you being charged 8%, then you'll really see that what is the difference when it comes to the repayment rate every month and ultimately as a whole, because this has an influence directly to how much you'll be paying.
So now let's go on to the second point, right?
Yeah.
The second point was the loan. So now this is where we're going to tie up everything with the 62 banks and where everything comes up. So now when you're looking at your loan or your personal loan, most of the time we get calls from our personal banks, right? Now remember, with banks, yes, they might be registered as a bank, but they specify or they really look into one type of thing. So you find something like your I forgot the bank that I wanted to mention. You look at this particular bank and they only look at financing properties. So now if you're looking at that one and you wanted a personal loan, the chances are they wouldn't actually give you that particular loan. So now you need to understand that what type of financing does that bank actually offer, or do they offer any type of financing? We have the credit card and the normal loan. So now the normal loan is always the one that's actually more expensive. The highest percentage that we saw on a normal loan was 27.25%.
That's a lot. But
your home loan, right? Let's look at these two.
let's balance them.
Let's balance this situation. If your home loan is giving you 10%, 10.5%, and your credit card or your normal loan rather, is giving you 27.25%. 27.25% is a lot. It's a lot. Now that will be dependent by what? Your credit score. We're always saying that never take chances with your credit score. I'd rather say that I'd rather go to sleep hungry, making sure that I made the minimum payment to my credit card or my home loan. Because now as a property investor, my credit score is my CV.
Yeah.
Once that's damaged, I can't invest in any more properties, or even if I do invest in any properties, I'm going to be offered this ridiculous 27.25%.
And at the end of the day, Level, I like what we're doing, because when we're doing research, our angle was that a lot of people are only focused on ownership. They're not focusing on the interest rates that I'll be getting. They're not focusing on the interest rates that I'll be charged, number one, and the interest that I'll be getting, that I'm targeting. So if you miss this, then you only focused on ownership. Yes, I took a home loan. I was charged 27.5%. And yes, I own that house. Let's just say that I took a loan of 300,000. I bought the house for, let me be practical, because I don't want somebody saying, guys, where can I buy a house for 300,000? Let's just say that I took a loan for about 800,000. And what I then did, being charged 27.5, then what I then did is that I bought it cash. I bought it. So according to the bank now, yes, I'm owing on the loan side. However, now when we're looking at the ownership, I'm the owner. Now then, here's the thing that people don't consider, is that I do not have control at that point in time of the rental income. What do I mean by saying that? If, let's say the house was tenanting, there were about 5 tenants in, and each was paying 1,000. So looking at it from ownership, yes, I own the property. Looking at the tenants, I've got 5 tenants in, each is paying 1,000. I'm getting 5,000, right? That's my total income. And now I can further do research and find out that in that area, nobody's paying more than 1.1. So that means I'm very close to the maximum. And then now only to find out with the 27.5% that I was charged is ridiculous. I'm not able to sustain this property. I still need to dig in my pocket.
At first, it was hard for me to comprehend that somebody would actually purchase a home using their credit cards.
Yeah.
Now, please tell us about that. And which one is cheaper between a home loan and a credit card?
The maximum on the interest, it's 20.5. Again, same as personal again, and also comparing it with a home loan. It doesn't make sense for me to only focus on the ownership, whereas I will be charged 20.5%. When I'm looking at my cash flow on a monthly basis, it's not making sense. We go back that property is a numbers game.
Now remember, when you're looking at your personal loan, right, it's something similar to what we spoke about earlier on as a private lender. So when you're looking at your personal loan, the most that I've seen a personal loan stretched to is around 6 years, right? But normally it's 5 years. Now the thing is, if I borrow 300,000 and I want to pay it off within 5 years, I'm going to be paying a whole lot of money, right, on a monthly basis. Your personal loan and your credit card, right, when you're looking at these two, you understand that you have to pay it within the next 5 years. Now, if you're having to pay it within the next 5 years and you don't want to actually go around the home loan, it would also be better for flip, right? Whereas in the next 6 months,
Again,
considering the percentages and the return on investment on your particular flip. Now, if I'm saying that my flip is going to be giving me 35%, and I went to the bank and the bank said 15%, I just need to make sure that I have those monthly payments for the next 6 months, so that when I do actually exit the deal, I know that I can pay off the home loan, the loan rather. Now let's look at home loans. This is where things get exciting.
Wait. These are my notes, bro. I'm taking this one. Or did you want us to speak about this?
Okay, go through.
These are my notes. I
also have my notes. Let's go through to the home loan.
So a lot of times, going back to us saying that we only focused on ownership, sometimes we're pitched a property deal whereby they're saying that they're stretching it. Instead of it being 20 years, it's being stretched to 30 years. Some people will jump into that deal. Other people will be like, but why are you stretching it from 20 to 30? Other people will deliberately say that I would like mine to be stretched out from 20 years to 30. Whereas you also find people that are still saying that from 20 years, I'd still like to minimize it to about 10 years. So again, let us understand the back office when it comes to property investing. And if you do want us to further elaborate on this, maybe in the property deal that you have or a property deal that you're looking at, just head over to our bio. There's 2 links. One is our email, and then the second one, you can literally book a Zoom meeting with us. It's going to be one-on-one, whereby we're discussing the situation at hand.